mighty crypto collapse. Bitcoin falling 4% here on the day. All coins getting absolutely decimated. Phantom down 9%. Binance Coin 3%. 4.75% for Avalanche and many more. What is going on? Why is Bitcoin throwing up here, getting close to $26,000? Is there any support or are we in for some more pain? We're going to go through that. Smash some likes. Don't forget to subscribe. Guys, I made a video earlier today explaining how we could be heading to this orange line that is 26.2. And you can see we have not only collapsed down to this level, but we have breached it. So now we need to go into my next price target, which I shared with you guys. Sits at a nasty level of 25,000. And if you think what's going on now is bad, I've been saying this for a while. I'm not perma bear at all. I'm bullish on the market longer term, but for now, we're in a painful period, and I've been saying that since 31,000. And you can see this pullback is now coming towards 25. As I've said, up until 25, it's okay. This is the red that I want to be buying personally, not financial advice, guys. You do your own research, you do your own thing, but I've been calling for this for a while. I've been waiting for the closer and closer we get to 25. We're at 26.1 now. I'll start my nibbling and I'll continue to nibble into 25. But here's the major risk. The major risk is that we may not stop falling at 25, right? Who's given me promises that we're going to stop at 25? Nobody. We could collapse here beyond that. So if you look at the weekly EMA ribbon, I've showed you this plenty of times. We're right now touching this EMA ribbon. But this EMA ribbon is lost below 25,000 now. It's climbing and climbing. Below 25,000 will now lead to us losing our weekly EMA ribbon. If we lose our weekly EMA ribbon, this is not just a minor pullback now. This is the bears taking back control and pushing us in the very least to a sideways market, potentially then pushing us down to some horrible lows, which we'll get into if we need to. But at this moment in time, we are falling. And the primary reason we are falling is Janet Yellen. Yellen came out again just moments ago seeing, and this is what she said, seeing just the beginnings of potential market stress, want to avoid type of damage suffered in 2011 showdown. She says, look guys, we're not far off from not managing to meet our obligation. And here's the irony. She has to say horrible things. She can't say nice things. You imagine you've got your two kids bickering, the Democrats and the Republicans, and they're not agreeing, and you're the person there sat there going, guys, please just negotiate a deal. Just negotiate a deal so I can pay the obligations. We are potentially 10 days away from a default. Now, of course, we've covered off the notion that the vast majority of the time, the debt ceiling is raised. It always has been up until now. There's a tiny percentage that it won't, and the US would default. But that tiny percentage is enough to spook markets. And you can see here, US markets here are down on the day. NASDAQ falling 1%. S&P down almost 1% as well. And Dow Jones down 0.75% there or thereabouts. But Bitcoin's taking the brunt of it right now. Bitcoin is taking the brunt of it. We are moving here sharply into our EMA ribbon. We can't say it's a surprise. We cannot say it's a surprise that we're moving into our EMA ribbon. Instead, we need to accept that's happened and decide on our game plan. I'm personally DCing at these levels. If you guys want to buy or sell any cryptocurrency, you can do so using the links in the description. Those are affiliate links to Bybit and Mexi. They're the two trading platforms I use. I know a lot of you guys ask me which ones am I using at the moment. Those are the two. They're offering you some amazing bonuses in the description. And personally, I'm going to be prepared for even lower prices. I'm going to start nibbling, but I'm going to keep my hand ready in case we start falling even lower. Because if we do, it could be a painful fall. Why? Because look at this candlestick, guys. This candlestick in March, when we climbed up, went from 21,800 all the way to 28,000, right? 21,800 to 28,000. So it moved 7,000 in moments, right? So what we now need to understand is when you fall to the downside, that could gap down quite quickly as well. Now, incidentally, we have a little bit of support to the left, right? We've got a little bit of support around 25,200. Can we hold these levels? 25,000, of course, is that important of support. Let's remove the EMA ribbon. Let's drop this down to the daily chart. I'm going to explain to you exactly what I mean. So where we're falling right now, this was the massive rise up, right? Boom, off we went. Now, when we come back, there's this level here and this level here. That's 25,000. If we lose 25,000, then we are back into the pain channel, which is this area here, which characterizes itself between 25 and all the way down. Let's use this line here at around the 18,700 level. Okay, so we end up back, if I show you here, in the painful, between the painful lines, this top yellow one and this bottom green one. We don't want to go back in there, but if we lose 25,000, then we do. Now, on the other hand, if we do bounce for 25,000, what a beautiful pullback that would have been, right? And that's why you've got to be in the game to win it, because if we do come back down here and retest 25, well, that's textbook. That is textbook us moving from 19,500, moving all the way to 31. You over edge it, then you come back, retrace some, you retest at 25, and then off you go. That's a beautiful upward trend. Big move, retrace, big move, retrace, another big move, right? But we got to watch the details. We got to watch for it. When we get to that 25,000 level mark, can we hold? Can we hold a retest? And if we can't, then we spell trouble and we end up back in this sideways motion. If we can resolve it, then great stuff. Now, one possible catalyst to get us back moving to the upside is obviously if they resolve the debt ceiling crisis. So if they can sort themselves out over the next 24 hours, 48 hours, even the next 3 or 4 days, that's going to help markets. But if they long this out, between now and the 1st of June, which is where the US would start to officially miss some of their debt obligations and not be able to make some of their obligations, which is what Janet Yellen is saying, then we could see some more pain. And that's the problem. How quickly are they going to resolve it? Not if they're going to resolve it, how quickly, or are they going to leave it to the final hour, in which case by the time the final hour comes and they resolve it, Bitcoin may already have lost its weekly EMA ribbon. It may have fallen below 25k already, and then we're back into this mess, back into this quagmire of being between 18,000 and 25,000 again, when we worked so hard here to break through it and get towards 31. Okay, so look, not the end of the world, right? If we draw the lines of where we're at, let me just show you a few more structures so we can understand. We're still within this cup and handle pattern, but only just, right? Again, let me just zoom in so you guys can see it. We're coming right to the bottom of this channel. Can we bounce from here and keep this cup and handle in play? If not, this pattern becomes invalidated. Okay, we've got to watch this cup and handle pattern. The other way to look at it is this channel, right? We know we're falling from this head and shoulders pattern. The price target of this head and shoulders pattern is 24,100. We've said that a long time ago when we were up here at 28,000. Okay, so that shouldn't be too surprising. But more interestingly, is does it want to come all the way down to the bottom of this channel at 23.5? That's when you start to get more pain, as if Bitcoin goes, no, we want to test all the way to the bottom of this channel. And then the question is, will we start to get support from there? Those are all painful situations. We'll take it as and when it comes. Remember, you still got the FOMC minutes to come out in a few hours from now as well. So lots of things which can trip this market up, but we're going to stay in it. I'm looking for opportunities to DCA. That's what I'm doing right now. I did say from a while ago when we're at much higher prices than now, that 25k level was a really nice mark, but I'll start DCAing just before then, which is around now, just in case we never get to 25, right? Because that's sometimes a trap as well. When so many people are expecting 25, sometimes it never happens. So I'll start my DCAs now. I'll start nibbling. For example, let's say I wanted to allocate, let's pick easy numbers, $1,000 into my DCA. I'm going to split it into chunks of $100. I'm going to go 100, nibble another 100, nibble another 100. As the price falls, I'll nibble bigger chunks, like 200 chunks, until I've allocated all my DCA. Never put your DCA in one go, guys. Always spread it out over a certain period of time so you can capture it over different price ranges and it helps you avoid FOMO. Guys, there is your emergency update. Make sure you call up on my normal schedule video, which I posted earlier today. If you appreciate these quick emergency updates on top of that, you got to smash up likes, you got to subscribe, you got to check out the links in the description, and don't forget to watch this video here. Thanks for watching, guys, and I'll see you in the next one.